Hello and welcome back. If you're new here, my name is Jessica Abella and I am a tax accountant in the greater Seattle area. Today we're going to talk about kid-related tax provisions. So if you have a new child in your life, this may be of interest to you. Number one, the child tax credit. So the child tax credit is $2,200 per child under the age of 17. It is indexed for inflation, so it will go up over the next few years. But the thing to note is that when the child turns 17, that deduction goes down to $500. So that can be a little painful in that year of transition. We're not going to get into the rules around claiming college kids because we're here talking about new children, but know that there are additional rules there. There are education credits as well, but we do have a separate video on those and I will link that down below. So the second provision to know about is the Childcare Credit. One thing to note is that if you are married, both spouses must have earned income, so either wage income or self-employment profit, in order to take the childcare credit. The max care cost for calculating this credit is only $3,000, $6,000 if you have two children or more. So the amount of care is still very, very limited. And the credit is generally about 20% of that cost of care. So $600, $1,200 if you have two or more kids. What can be a better option, if you have this option, is the Childcare Flexible Spending Account through work. So if your employer offers it, you can set aside up to $5,000. Starting in 2026, that's going up to $7,500 pre-tax through your employer. You'll still need to show the cost of care on the tax return at tax time. So you still need to be able to provide the care provider's name, address, and tax ID number and the total amount paid, regardless of whether you're taking the child care credit or you're using this child care flexible spending account. But certainly, as the flexible spending account allows $5,000 whether you have one child or more, and $7,500 in 2026, it's going to give you generally a better benefit than the child care credit if you're able to take advantage of it. The next tax provision to be aware of are the 529 education plans. It's an account that you can set up with an investment firm, Schwab, Fidelity, whoever. Contributions into these accounts are not deductible, so you don't get any tax benefit for putting the money in, but the money grows tax-free. The tax benefit really is in the ability for this account to grow, interest, dividends, stocks, to grow, and that those earnings will never be taxed as long as the funds are used in an appropriate way. So it's generally for education expenses. The definition of eligible expenses has expanded with the newest tax legislation, and there is a laundry list, but in general, elementary, secondary, post-secondary education, a whole bunch of other related expenses. If you don't use these funds for education for whatever reason, the funds are taxable and there can be a penalty on withdrawal, but there are some exceptions. You also now can roll over funds from a 529 plan into a Roth IRA for retirement, up to $35,000 lifetime limit, as long as the 529 plan has existed for 15 years. Definitely a good thing to keep in mind that even if you have overfunded perhaps a 529 for education, or your child doesn't go on to secondary education, post-secondary education, that there are options to use these funds, and you still got tax-deferred growth, if nothing else. The one thing to keep in mind is that while these funds can be used for elementary education, because the main benefit of a 529 account is those years of tax-free growth, putting the money in and then taking it right back out for elementary education, maybe shortchanging the opportunity for growth. So keep that in mind. Also, sort of in the 529 vein, gifting is something we should chat about. Anybody can give up to $19,000 per person per year to anybody that they want. And so if you are funding a 529 account for your child, know that you can put in up to $19,000 if you wish, or a grandparent can, into either that account or an investment account for the child or any other type of account in the child's name. That's fine. Do know though that when kids do have investment income, they may be required to file a tax return and to pay tax on that investment income, whether that's interest, dividends, capital gains on stock or mutual fund transactions. And that depending on the amount, that investment interest may be taxed at your rate as the parent and not at lower rates for kids. You can't simply shift investments to your child's name in order to avoid tax. On this note of kids having tax returns, though, we do get questions quite a bit about hiring your kids. If you have a business, you may be interested in hiring your child and shifting some income to your child. We do have a whole separate video on this. I'm going to link it down below. But in a nutshell, yes, it is indeed true that your child can have earnings from a job of up to $15,750 this next year and not owe any tax because of the standard deduction. And they can use that $15,000 to fund maybe a Roth IRA and grow retirement savings, which would have many years to grow and be a really good nest egg for them. It is more complex than that though, especially when it comes to state law. Most of the social media posts that I see about this really focus so much on the federal law that they don't give you any sort of cautions about state laws you may run into. So here in Washington State, it is more complicated. See that other video if you are interested in this. And you must have records on how you determined the hourly rate you were paying, what work they completed to earn those dollars. They have to actually work for those dollars. So hopefully this has been a helpful rundown of things to keep in mind with your new child. If you have additional questions, feel free to drop them in the comments. I will try to get those answered. If this was helpful, please click like, subscribe if you'd like to be notified of our next video, and I hope you have a fantastic rest of your day.